Welcome back to the CNBC Market Sell-Off Special. The major index is plunging today after the weaker than expected jobs report. One place we saw a spike, well, that was in the Volatility Index, touching its highest level since March of last year. So what is Wall Street's so-called fear index telling us about where the market is headed next? Chris Murphy is co-head of derivative strategy at Susquehanna, and he's here to discuss. Chris, the floor is yours. Do tell.
Sure. I mean, like you said, highest close in over a year. One thing that we also look at is actually two things that we look at. Term structure inversion. All that really means is the very near term fear and panic is elevated compared to the medium and longer term. And that's often a sign to us that much of the stress is being priced into the here and now. And believe it or not, when we see something like that happen, typically, 80, 90% of the time, a month later, the S&P's higher because it's kind of telling you a lot of panic has hit all at once.
Wow. So let's just let me make sure so when it's inverted like it is right now and it jumps very quickly in one day, you say you're looking at it now and it's actually a bullish sign.
Well, 9 times out of 10. So now you have to ask yourself, are we in COVID or the great financial crisis or one of those other, 1 out of 10 type scenarios? Or are we in a situation where positioning got really offsides? There's definitely some near-term pain in a lot of the most crowded positions. But is this a longer-term, systemic thing? I mean, we were all kind of waiting for rate hikes to start to slow the job market. It took a little bit longer than expected, which allowed these positions to build up much more offside. So, we might see some more near-term pain in the unwinding of those positions, and we saw some signs that might be the case, but it doesn't seem like a longer-term unknown from my vantage point.
You say buy the dip has been working all year, and investors are positioning as if this week will be no different. Where you mentioned there were kind of two things you're watching, one of them being that term structure. What else is on your radar?
Well, it is interesting to note that the most consistent trade, even the last 2 days, has been investors selling downside puts, basically saying, I'll buy on further weakness. Most of the last year or so, it has been just, I'll sell these puts because this has been the most, profitable trade. So when we start to see some volatility, then we say, okay, well, if we continue to see all this put selling, that's a sign that, investors are not as scared in their single stock names that they really like. I mean, you mentioned Amazon. Obviously, it was down a bunch on earnings. The most notable trade that we saw today was a big put seller basically saying, okay, Amazon's a little bit less expensive now. I'm willing to buy it on further weakness. That's
interesting. Chris, as always, thanks for giving us a little lens kind of further into the dynamics of this market. We appreciate your time tonight.